Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, February 11, 2015. Here's a daily chart of the SPY, and lo and behold, blue trend line held. We stayed above it, and finally we're starting to break out again. And what's happening here is you're looking at an after-hours market quote that brings the spider up to 207.45 at the high right now, and the futures are up about 11 points on the spider, or I'm sorry, the E-mini, the S&P E-mini futures are up about 11 points, and this is as a result of some data or news, propaganda, whatever you want to call it, that came out of a meeting with the European Union representatives and the Greek New Parliament representatives. And apparently the news story is they have an agreement in principle, and therefore the market perceives that as positive, and therefore they're sending the market higher. And we'll talk about the specifics in a second. But the reality is that we've read this book so many times. There's an agreement tomorrow or the next day. There will be no agreement, or after the weekend there will be no agreement. They couldn't agree in principle. All that stuff. It's going to go back and forth several times. We've been going through this Greek scenario since 2010. So what we do know is that whatever the first story is normally wrong. However, we don't care what the story is. What we care about is what the market is doing with that story, or what the market's doing, period. And so that's what we're talking about here. So what's the market doing? It's going higher. How much higher can we go? At this point, I would have to think, as long as nothing happens different from the time I'm recording this until the morning, and we do open up tomorrow higher with higher prices, I have to think the next level that we head for is right around this double top area. That's going to be, well, it could be between 208 and let's say 208. The top, we'll use the top here, which is 208.97. So we're going to say between 208 and 209. What's going to happen is we'll probably find some resistance at 208, and the market may stall out for a while there, or it may just be a straight shot up into the double top here. Do I think we get through the double top on this move? No, I do not. Do I think the market can be a short up at double top? Yes, I do. It all depends on how we get there, however. And what would preclude a short at double top would be, let's say tomorrow we stopped here and we went sideways for 2, 3, 4, 5 days. Then the double top may be off the table and we might look for higher prices. But as it stands, mainly this week, I don't think we can get through this double top this week. That's what's important right now. Can I be wrong? Of course I can be wrong. You're in the risk business. The markets are the risk business. We're going on probabilities. I'm giving you the benefit of my work, and the probabilities from my work tells me that the market doesn't have enough velocity to get through double top this week. Okay, I can't tell you what it's going to do next Thursday, but I can tell you right now, this week, I don't believe it can get through double top. And that's where we stand now. If the market reversed, nothing really changes. We're still going to find plenty of support down at this blue line here, but that's a way off from now, so we don't have to pay attention to that. We don't have to worry about that right now. Normally, people would look at the market on close today and say, well, nothing happened. You know, the S&P was flat, the Dow was down 6 points, that's flat. The NASDAQ was up 13.5 points. That's a little better than flat, but not much. It's a quarter of a percentage point. So really nothing happened, but what happened was after the close, and what we're interested in is what happens tomorrow and how they close them tomorrow. Okay, so that's what we're looking at, and I'll certainly give you the update as I have it after the market close tomorrow. But tomorrow should provide an interesting day. As it stands now, we should see upside. We'll see what develops from there. Okay, let's go over to the gold market. If I can get the chart up on the gold market. Okay, here it is. Just a little delayed there. Here we go. This is the GLD. Now, okay, this is the GLD. So we saw lower prices again in gold. In fact, the price of gold futures on the April contract is down right now as we speak at 12.18. And remember, I told you that a target would be around 12.20, maybe 12.10. I don't think we would get down to 1200. I've worked out an exact number, and the exact number in my work is 12.12. Okay, so if we break significantly below and close a day, for example, or we continue to close hourly below 12.12, something else is going on. We should see a bounce off 12.12. 12.12 would actually be a pretty good buy level if we closed hourly above above 12.12, and we closed the day above 12.12. I think we would see some upside. Where does that put us here? Puts us, about another dollar level, figure a dollar lower, figure around 116, give or take. 116 in the GLD is your number. If we significantly break below that and close below that, something else is developing, but I think this should provide wonderful support. Now, there's something else in the price of gold that's very important, or the gold market that's very important. Remember, I was telling you that I believe February would mark a monthly top for gold. And I said a lot of times the market will rally into these daily tops, weekly tops, monthly tops. And I think that's a distinct probability right now. Let's say, here's a hypothetical scenario. Let's say we get to around 12.12, the market bounces off 12.12, and we have a rally for a week or so, and we go up maybe $30, $40 off that level in the price of gold futures, which translates to maybe $3, $4, $5 in the price of GLD. That may be all that's in the tank, and if the monthly cycle top for February does take hold and play out, we're probably going to see lower prices into, let's say, March, April, maybe even as late as May in the price of gold. And that doesn't mean they have to be significantly lower, but what that does mean is that the market would be pressured on the downside in the gold market. So you wouldn't want to be trying to play gold long through that period of time. What you would actually be doing is selling into bigger rallies, okay, rather than buying pullbacks, because the pressure would be on the downside in gold. Okay, let's move on, and let's go over to the USO. We'll talk about oil for a minute. That's not USO. This is USO. We'll talk about oil, which had another down day. The came into the 50-period moving average, bounced off of it. On the daily chart, the daily cycle top that we had put in here definitely took hold. However, we're now starting to come into a decent level of support. We're also coming into a time period where we may have a nice trade to put on. So I'm going to reserve that for the members when it does come around. But we're coming into a period of time where I'm looking for a particular number in the price of crude oil in order to put a trade on, and I'm not exactly going to tell you yet whether it's on the long side or the short side. I might have tipped it off. You have to go back and rewind the tape and see if you can figure out where I tipped it off. But that's where we stand right now. I will update you on a daily basis. I'm not necessarily looking for a big move this week in particular for the price of crude oil, but I do see a nice move coming, and when we get that move or right before that move, I'll certainly talk about it here. Let's go over and talk about one more thing. I want to talk about the bond market. I'm just going to bring up the price of TLT, or the TLT chart, which is the 20 to 30 year Treasury bond price opposite the yields. And as you'll see, we came into this 50-period moving average, and we're going to have to see how the market reacts off this level. This is going to be good level of support that I told you about before. This pivot high down here, we'll call it 127.5 to 127.75. But what I do think is, in the bigger picture, on the monthly and even more importantly, annual cycles, okay, the price of the 30-year Treasury bond, okay, hit 150. Let me give you the exact number. I'm looking at a different chart. It's just, while I'm talking about it, I want to be particular about the number. It hit 151.28 on the high. Yeah, that was the high, 151.28 on the price of the 30-year Treasury bond. It's not important if you don't understand the bond market. It's not important if you don't know where I got that number from. Don't worry about it. What is important is I believe that that's going to mark a very long-term high in the price of bonds. Now, this is where you need to pay attention. This is what is important. What that means is, and this doesn't have to happen right away, and the market goes back and forth, and it goes back and forth for weeks and months at a time, but what I do believe is that we've seen the low in interest rates, and this could be a long-term low. And where is that low? I'm going to use the 10-year as a proxy, and I think this is going to mark a low in interest rates. I do not think we come below this low right here, which marks 165, or this day was 165. 165.1. We'll call it 165. I do not think the interest rate market comes below 165 anytime soon, meaning this year, next year, into the future. That's what my work is telling me. If something else starts to develop, we certainly take heed of it and we change our mind based on what the market is telling us. Right now, the longer-term cycles in the market is telling me that the bond market has topped out and that the yields have bottomed out on a longer-term basis, okay? And this is something that we're going to continue to talk about into the future, but I just finalized the work in the last few days on this. I've done the calculations, the charts, the Fibonacci retracements, the long-term charts, the long-term cycles, the intermediate-term cycles, and I've done that all ad nauseum. I've done it over the last several days, and this is the conclusion or the result of my work, and therefore I'm passing it along to you because I think it's very important, because I think it has a lot of impact that we'll begin to talk about in the coming days, weeks, and months on other markets, the stock market, and even other markets beyond that. So I think it is important. It's something we want to note, and therefore I'm going to keep talking about it. But this is the first time that I'm giving you the benefit of this discovery that I think we do have a longer-term top in the bond market, longer-term bottom in yields. Thought that was important. Hopefully this has been helpful, folks. I'm going to leave it there tonight. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.